Hey everyone, in this video I'm going to show you exactly how to find the correct reversals and pick the exact tops and bottoms in the market. So this is working off of the ICT 2022 mentorship model, which works based on liquidity sweeps, displacement, and a fair value gap. A lot of people tend to trade this model wrong and incorrectly, resulting in a lot of losses and not understanding the more refined rules of what we need in price and the signatures it shows. So I'm going to try and clear that up, and this is mainly a teaser into the main strategy that I use to make my money trading. Now, this isn't going to contain every single rule, but this is going to have a very good framework behind it so that you can basically instantly use this. So first off, let's quickly read on some of the rules. We need a 15-minute plus sweep with SMT. This has to be on external highs and lows. By external highs and lows, I mean stuff like this. This is the external, this is an external, this is external, this is external. You don't want internal SMTs, right? Now, secondly, on the lower time frame, once you drop down after you've had the sweep, to confirm the SMT, you need your 1 minute CISD plus fair value gap plus inverse fair value gap. That's going to confirm your SMT and provide the higher probability signature of the reversal. And then thirdly, you're going to enter on the retracement. So this is how you would get in on price. A few minor rules is that the fair value gap and inverse needs to be more than one tick in size. You can enter on the second fair value gap if created, so I'll explain that later, and or you would market execute on power of 3 candles, so I'll explain that later too. Now, for the first example, you can double cross-reference all of these SMTs. In fact, I'll show you, I've done them all myself, so none of this is lies, right? These are, in fact, real SMTs in price. Where's this one? Here's, yeah, so these are SMTs in price, look, clear SMT. So you can double check yourself, but to keep it simple, I'm not going to have ES on the chart. Right, we've had our SMT. At this moment in time, ES has spiked the high. So now we drop to the lower time frame and we look for these signatures. We can clearly see, because I've marked them out beforehand, we've got an inverse fair value gap here, we've got a fair value gap created, and our CISD is the consecutive order block candles. That means that you cannot pick the top one. Has to be consecutive until the color changes. Or you could use, as a lower probability scenario, but it's still acceptable, a CISD on the opposite side of the curve. So this is just a creation of an order block, less about a CISD. Now, only once all them signatures are confirmed, then you can look for your entry. So as this candle closes below, we don't have the fair value gap made yet. Next candle, we have fair value gap made. So we have our entry typically inside the fair value gap. The reason the entry is here is because of this rule. You market execute on power of 3 candles. When the candle has done this, where it's opened, dropped, and closed higher, creating after a fair value gap, we need to then look to have an entry inside the execution of the next opening, because it's unlikely, it can happen, but it's unlikely that the candle might continue higher to then give you an entry. And what I'm saying is that it's more likely then it might do something like this and you would miss your entry, as this is already the drive higher into these gaps. Okay, you can also tell here just quickly that it has made a second gap, and you would include volume imbalances in these. So due to the second rule I had here, enter on the second fair value gap if created. We create a second fair value gap, and the second fair value gap is created on a power of 3 candle, which means that it's already done the manipulation higher as it's closing. So this is only because this candle is white. You would market execute. Stop loss always goes on the high of that market that's been created, because the SMT high is always safe. No internal high, no like reduced stop to try and get all fancy and get a better risk to reward. Don't do it. Just put it on put it on the swing high. That's where the SMT is, that's where it's safe, and target a fixed 1 to 2R. You can see in this example it worked nicely. One thing to note is this isn't the correct time you would like to trade though, because this is 8:30 open. Typically we want to see setups within these main kill zones, so London, AM, PM. I'm going to move over. Let's have a look at this setup. So we can see here's the SMT with previous daily high. We've got our inverse, we've got our CISD, and a fair value gap created. So our entry would be inside this gap. Now, it's unfortunate for this scenario, but it doesn't actually come up to that fair value gap, and so you would miss out on that trade, and you might have some FOMO seeing it drop, but that's just the reality. I just wanted to include that because that does happen. Let's move over to the next one. You can see here that this is created at 2 o'clock. So this is London Open. I didn't want to pre-draw some things because I personally don't like this, since it's very hard to get good price readings on fair value gaps and gaps created. But there's your inverse, there's your fair value gap, there's your CISD. As soon as we close above, we can market execute here, because we're not, unless the fair value gap is created last, only then do you look for the retracement entry. But if it's not, you typically market execute once all three are made, and you target 1 to 2. And you can see we hit take profit there. Next, SMT on this high with, okay, this one comes first. So this is SMT on the external low from London on the AM session. We can see that we're dropping down and we create a clear shift in price. We have our inverse, fair value gap, CISD. Entry goes inside that fair value gap. Stop loss on the low, target 2 to 1. It hits cleanly. Let's do the same for this high here. So here's our inverse, here's our CISD, and you'll notice, why haven't I drawn a fair value gap? There isn't one, because this one here is only 1 tick in size. I'm looking here, right? So it's 1 tick in size. Remember the rule, we don't do them if they're 1 tick in size. 1 tick. So after this level of price action, you're not going to be looking for a trade. You're not going to try and draw this because it's sloppy. You know, you don't want to enter in sideways markets. It does end up still working, but that's fine. You're going to miss some. Some are going to be like that. Now let's look for the next example. From Asia low to here, we have our inverse. We have our fair value gap created that's more than 1 tick in size. We have our CISD. And so as this candle's got closed in here, we don't have the inverse yet, so we still have to wait. We can't look to enter. Only after this candle's closed, now we have the CISD. So currently, your entry would look like this as this candle's closed. Once this candle closes, it's created a new second fair value gap. Remember the rule? And it's created the power of 3 candle. So you would enter straight away on the close of that, as opposed to waiting for this. So you enter on the close, target the low for the stop loss. 1 to 2 are fixed. Hits take profit. Here we go. External SMT from London high to AM session. We have an inverse fair value gap, CISD, and here's another example. We create 2 fair value gaps. So as this candle is closing here, to create the exact rules we need, we're looking to enter in here. As it closes again here, it makes a secondary. So we enter within, we have our entry within the secondary gap. Stop loss on the high, target 2 to 1, hits it cleanly. And then I believe this is the last example, yeah. So all this is just last week's price action, by the way. Just so you can see, this is from Monday, the 7th of July. Here's the last example. So we have SMT on these highs, 15-minute plus SMT, by the way. You can see this one's a bit of a different example because we get an inverse here, CISD, but we don't really get a gap in size. We get a 1 tick gap, doesn't count. We drop, we drop, we drop. We finally get our gap here. Now the gap creates a power of 3 candle, so we can market execute. Stop loss on the high, target 1 to 2, and it hits it cleanly. So I hope that helped. Like, this video is mainly a teaser because there's still so much more to this because you can't catch every single high. Not every single high has this pattern, and you can't pattern trade this since there's more rules that make this higher probability. I'll make a I need to make a more in-depth video that's showcasing this same fundamentals in terms of rules, but there's so much more to it. There's micro rules that I'm just not going to go into right now, but they are there to improve this strategy. And I can guarantee, yeah, because of my results, this strategy here, including having, the extra mini rules that I'm gonna explain in another video, you should have somewhere between a 70 to an 80% 1 to 2 win rate. That's a 1 to 2 risk to reward win rate. Okay, and it is that high, right? Because SMT is what's giving you this confirmation for the reversal, whereas you can't just catch every single reversal in price. So I hope that helped. Like I said, I'll make a new video showcasing some extra rules, like hidden little things to improve it further. But this is a very good framework to just use if you're new and understanding the 2022 model. I'll see you in the next video. Take care.